All right, everybody, hello and welcome to Real Talk Office Hours Hunting for Silver Linings for this Wednesday, June 3rd, 2020. Hosted today by Corey Hart and George Katsanos, and special guest, we have Kasra from Baton Rouge, Louisiana. We've spent a lot of time going around the world, and we're excited to be right back here in the U.S. for an update on a really exciting community out down there. So, and this is all brought to you by Startup Grind, the world's largest startup community with 600 plus chapters in over 125 countries. Startup Grind, we operate with a mission to educate, inspire, and connect, and we're driven by three values: make friends, not contacts, help others before you help yourself, and give before you take. Now, this pandemic has been and will continue to be the great global leveler, and as entrepreneurs, we do our very best for our businesses, our teams, and our families, and we should be informed, rational, analytical, and rigorous in our thinking. We should also learn to control our biases as they emerge in various circumstances. We invite you to join us live every Monday, Wednesday, and Friday at 1 p.m. Eastern Standard as we track the intersection of facts, biases, and action through review of global financial markets, alongside check-ins and real talk with Startup Grind chapter directors, entrepreneurs, and ecosystem stakeholders from across the world. Now, no one has a crystal ball, but if we keep our eyes and ears open and we pay attention, we may be able to see around the bend, and with some luck, spot the silver linings that are around every cloud. If you miss the live events, you can view the recordings at startupgrind.com/grand-rapids, where you can also download the reading notes from the show. Now, before I introduce George for the global market update, just a bit of housekeeping. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy or sell financial assets, real assets, commodities, futures, and or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade or invest, please call your broker. Now remember, however, risk is everywhere, even when you think that you're not taking the risk. Now with that, it is my pleasure to introduce George Katsanos to get us started with the catch-up of what the global markets are thinking.
Thank you, Corey, and welcome to another day in Real Talk. The markets have taken cue from the liquidity, but at the same time, the optimism that is very widely shared throughout the globe. The first area where we see this optimism is the currencies, as we have discussed in the past. The safe haven considerations that drove the dollar to recent highs are beginning to subside. Across the board, with the exception of the Japanese yen, and we'll come to this in a moment, the greenback is weakening. As you see, it's trading at 112 against the euro, 125, 126 against sterling, and all the way out to 108 against the Swiss franc. What we see, in other words, is a positive perception that the markets will conform to the expectations of the policymakers and will give room for improvement in the underlying economic activity. The reason the yen is weakening against the dollar for the most part is because clearly Japanese banks are beginning to buy foreign currencies, including the dollar. They are trying to take advantage of the recent recovery, and the history will tell us whether they're coming late to the party or the party will continue to move on. For other clues, let's look at the bond market. In Asia Pacific, the bond market has done very little. As we have seen, the central banks throughout Asia are capping interest rates. And the reason for this capping is to avoid increasing costs of borrowing. Having said that, we see that in Europe, the picture is getting equally positive, with Italy and Greece being the weakest of the Eurozone countries, still being in positive territory. In other words, the 10-year yield in Italy is 1.55, in Greece is 1.47, very low by historical standards, at least in the recent past, whereas Germany is showing a 10-year interest of minus 0.4%, the same as Switzerland. Here in the US, the 10-year bond is trading with a yield of about 0.76. The recent weakness could be a harbinger of expectations that the fixed income market is not rightly priced, meaning that with economic optimism, we should expect the yield curve to normalize again, meaning the market seems to be alluding that we're heading into higher interest rates. Mexico flirting with the 6% handle on the 10-year bond, and Canada at 0.6%. The equity market is essentially telling us that the European equities and Asian equities have been partying. The party has gone non-stop. If you look at the map again across the world, from Pakistan, India, Korea, China, Australia, New Zealand, everywhere, the picture is very positive. It is very rare that we see back-to-back these green numbers across our screens. The only negative number is the volatility, the fear factor that is declining to low recent historical levels, low levels. That means the policies of both the fiscal authorities, but also the monetary authorities, central banks and parliaments, have been supportive of, first of all, arresting the decline, and second, promoting growth. And to this extent, what we also see is that the commodities market has been very positively predisposed. West Texas Intermediate, $36.6 a barrel. Brent flirting with $40 a barrel. Natural gas, $1.1 per thousand BTUs. These are recent highs after the declines that we've seen in April. And I think the outcome, particularly in the oil market, is going to remain subdued. It all depends on whether the OPEC plus Russia maintain the tighter supply. The demand will remain relatively subdued. And when I was talking to an oil analyst yesterday, he told me that there is enough oil in the market in tankers that it will take at least another 6, 8, sometimes even 12 months for this extra supply to be dealt with. Gold is retreating back to around $1,700 per ounce. And again, this suggests that safe haven considerations are subdued. The fear of inflation remains there a little bit, and we will see what happens over the next few days and weeks. On the agricultural front, the Chinese influence remains prevalent. Unless we see some huge demand from China, soybeans are going to remain subdued. The crop is big. The planting has been successful. And corn and wheat are also behaving accordingly. Although we see some recent improvement in pricing, the weather has been very positive for the grains. Back to you, Corey.
Thank you, George. Appreciate that. Yeah, with the backdrop of events across the globe over this past this week so far and weekend, it is pretty interesting, the rally. Want to get into talking with our guest and introduce him in the second part of our show here. So Kasra, welcome to Hunting for Silver Linings.
Hey, how you doing, Corey? Thanks for having me. Excited to share what we're doing here in Baton Rouge and hopefully give a little something to the audience here.
Yeah, that's awesome. I'm really grateful to have you here. We've been checking in now for a couple weeks, 3 times weekly, with people around the world from our startup brand community, and it's been really incredibly informative. So, but what's also really interesting to us is these chapter directors, the people that are driven to help elevate their ecosystem. So I'd love to learn a little bit more about you. We had an opportunity to chat a little bit before the event here, and it sounds kind of like you were born into entrepreneurism. So you have had the bug since you were born, maybe?
Yeah, absolutely. Well, I didn't know it was a bug at first. I just hated it. Little background. So I was born in Iran when we moved to the States when I was about 6 years old. I grew up in family businesses my whole life. So everything from the restaurant business, construction, my family had a notary. They've really tried it all, and I've seen them succeed and fail, succeed. And being a kid, being part of that family and having to work in it, I never saw that as, oh yeah, I'm learning about entrepreneurship. I just thought, damn, I just want to go hang out with my friends. Like very, very simple in that sense. So when I got to college, I went towards a different career path. One in occupational safety and health, where, I'm working with workers in their safety building practices, behavioral based safety programs, things of that nature. It wasn't until I was part of my first job and just a few months in that entrepreneurial bug clicked, and it came back and a bit hard. And I didn't, it's hard when you grow up in an environment where you can make any change at any moment without asking or, writing up a proposal and just testing it. But, we couldn't do that. And especially in safety, it's a very regulatory based career and department overall. So anyway, from there, man, I tried to do my own safety consulting. I did health and wellness, product sales for a while. Ultimately, my experience in trying to build connections brought me upon the startup that we're working on currently, which is Mentor. It's an exclusive networking app for entrepreneurs that is powered by AI recommendations. So we help entrepreneurs connect based on, mutually beneficial characteristics, their experience, needs, personalities, and then we drive them to meet. So from the time that you connect with someone, you can schedule and meet all in one platform. No content, no news feeds, none of that. And then from there, man, it just kept going. So I started writing a book on entrepreneurship, on networking last summer. Hopefully, I'll have that published by the end of the year. It's called Assholes: How to Give First and Network Later. As you can see, the give first model that Startup Grind uses was very attractive to me. That's what we built our startup on, and it's what I write on and I work on daily. So with Startup Grind, there wasn't too much here in Baton Rouge. We have some great quarterly pitch competitions and one at the end of the year, the Baton Rouge Entrepreneurship Week. So, we have speakers that come in, all these things. But in between, there was nothing. So I started doing my own meetups, and they were somewhat successful, but ultimately, it's hard to start something like that on your own. Kept doing them, had, Founder Fridays, had lunches. And then I came across Startup Grind. And after I went to an event in New Orleans, after I got connected with that chapter director, immediately reached out, trying to set up here a chapter here in Baton Rouge, applied, got it, and we started in December. So we had, we're going on our 7th event in 2 weeks. And, we had to adjust to be virtual now, but that's where it's led us.
That's awesome. Congratulations on starting that. I also am a fairly new director. My first event was in December as well. So
awesome. Congrats, man. We're in the same boat. There you go.
Yeah, we are. So I think George has got to take off a little bit earlier than normal. I want to let him ask you a couple questions about your ecosystem right there in Baton Rouge.
Of course.
Kasra, first of all, thank you for joining us again. 2 questions that I have in mind. One is, given the shock that we had in the system, both supply and demand shock, what are the expectations of the local entrepreneurs that you talk to? And the second question is, what is the structure of your entrepreneurship stroke venture capital type of infrastructure? Angel investors, banks, private equity boutiques, or venture capital? To what extent are these prevalent in Baton Rouge?
Sure. Thanks for having me, George. And of course, so the ecosystem here, we're hit hard. So we're very dependent on oil. There's a lot of plants here, which is the reason I became a safety specialist, because that's a job that's high paying and you'll always have. So here, it was hit pretty hard. Most investments that are made, people love brick and mortars here. So, restaurants are huge. So immediately when this happened, one of the first things that came out was, the city of Baton Rouge launching, these really programs to help the restaurants here in the city. My family owns a restaurant, so I completely get it. Buying up gift cards, doing things like that. It seemed to not have hit us too hard, but just before we opened last weekend, 2 weekends ago maybe, in phase one, 2 or 3 restaurants that have been really prevalent in town closed down. The restaurant me and my fiance went to for our first date closed down. And there was and these are restaurants that have been here for 15 years, so it has hit us, fairly hard. And the entrepreneurs have responded better than I expected, honestly. This ecosystem there's not a lot of pressure for this ecosystem to be, a startup hub. It's our ambition. But just in that short time, I've seen a close friend of mine who runs a on-demand, lawnmower service startup, essentially, completely pivoted his model from offering it from like an Uber standpoint to sharing that platform for actual mowers to run their business, and he made that from the time that we got into the pandemic. I texted him, he's like, hey, can't talk right now, head down, we're making changes. And then 2 months later, I see a post that he made those changes. So that was really great to see. But across the board, we've had, plenty of people make great updates, I think. In terms of VC and angel investing, we have an angel group here in town, in New Orleans, about an hour away. There's another one. There's, one VC firm. I think another VC firm just opened up. Maybe it hasn't been announced, but in the last couple of weeks has been put together. But, most people here go for outside investment, outside the state, I'd say. And it's not that the angels and the VCs in town don't want to invest in the companies. They simply just don't have the, enough capital allocated to do so.
Thank you. That's very informative. Thank you very much.
Yeah, we're finding a lot of a lot of that when we're talking to some of these emerging ecosystems where they're still trying to get things moving. Now, there is the Innovation Park from LSU, and then I saw like Baton Rouge has an entrepreneurship week, so that it seems like there's some activity and action.
Absolutely, there is. It's on us as the entrepreneurs in town to not accept that as the only thing, and to want more. There's been so much done, I've done so much just with Startup Grind here, and still, you'll still hear me harping and saying that we need to do more. Simply because the world's moving too fast for us to have one new event every year, one new VC firm every few years.
Yeah.
It's moving too fast for us to do that. And if we want to be serious about becoming a startup hub, which I believe we can, we have, they say in Louisiana, there's 3 things really going for us: food, football, culture. Like, those are amazing things. And those are a foundation for people to move here and want to build a family and stay here. Instead of, let's say people maybe go to the Valley to start and leave. Like, if someone moves here and we become a startup hub, there's so much incentive to stay. Now, there's more work to be done, though.
Yeah, I think in Michigan, we have similar issues where for so long, founders have had to go outside of the state for capital. Right now, we're having record year-over-year increases on people being able to raise for that initial angel round. But then now we have like almost $1 billion a year where we've got a gap in follow-on funding. So it's still that need to move outside of the region, outside of the state. But that, maybe perhaps, and we talked a little bit about the opportunities that the pandemic has brought us. So one of the opportunities that we're seeing, George and I, are that it's a little easier to start virtually traveling into different geographic areas and expose your idea or your startup to investors
100%.
all over.
100%.
Yeah.
Hey, look, us. So for my startup, Mentor, over 80% of the investors that we speak to that are on our monthly email list and that we have relationships with do not live in Louisiana. Uh-huh. So we gave up on that a long time ago. Because if we wait around for it, we're slowing down the community too. Now, if we can go get that outside investment and we can stay in town, which we're remote, so it doesn't really matter, then that's something that we need to do. And I think more startups need to, you need to meet people near you. Okay. And yeah, it's not really great to cold call or cold email. And yeah, it takes some time, but you can wait around until you feel credible enough, or you think you've done enough to get, the handful of investors that in town to talk to you. But there's plenty of people that are, would love to be connected with you, would love to meet. And as long as you, I think, approach them in a genuine and authentic way, they'll respond, that they will. And I think we're scared of that. And I was for a long time to reach out to investors. I'm okay with getting no. Like, you have to really speed up your recovery process mentally when you're, worried about what other people will think or what the answer will be to, to the ask, which is, I just want to meet you, and just want to meet you. We'll love to build a relationship. Maybe 6 months from now, as you saw some of our progress, maybe something works. If it doesn't, that's fine. Do you know anyone else? Just keep it going.
That's the best question, is that last question is like, who else do you know? Like, it's no for you, but who do you know that might be a yes for? And it's really, this isn't a unique problem, especially among young ecosystems, right? Because maybe we are the ecosystem or the region has been just brought up for generations with, well, there are 2 banks in town, and if I'm going to get a mortgage for my house, there's 2 people to say no to or yes to me. And so we have this like weird mindset where we're like, oh, it's not even scarcity. It's just like, I have until the end of the street, and then that's as far as my opportunity goes.
So maybe, and we're if I may just expand on that, we're getting into a time. So this this pandemic has accelerated our path to remote, our path to working virtually. I will never move to the valley because someone wants to give me investment there. Like, that's not going to happen. I'm not even focused on that. We're focusing between the coasts. Mm-hmm. Why? Because there's a lot of amazing talent in between the coasts. There's a lot of amazing people that want to help people between the coasts. And we need to stop thinking as, these 2, the Valley and New York as the only place you can go. Start with your city, then the region, and then move up and down, the country, and try to find people around you that you can potentially meet. Because I mean, I can go, it's something that's, I feel like, I've recently with us in the last 6 months have like a light bulb was turned on, and you begin flexing a little bit, like when you send the emails now, like when people, I've had now people in town reach out that have never wanted anything to do with me. Right. And that's okay. Like, so that's part of it, and you don't need to like beg each person. You just, you can reach out and say, hey, let me know if this is a fit. If not, don't even worry about it, or you don't even have to respond to this email if you don't believe it's a fit. Like, let them know, like, you're not here trying to beg. You would love to just build a relationship if they're willing to be open too. And I think you'll move down the pipe much more quickly.
Yeah, and you brought up a really good point that there is so much opportunity between the coasts, and we're seeing that more and more. Like last year, there was a study done in the Bay Area, and they found that over 60% of the people wanted to. They said they want to leave the Bay Area within the next year. They're like, I'm done, I'm out. And then today there was news about the decrease in real estate prices, especially in the Bay and in New York. Now Oakland, across the water, is up 4% this month over last year, but we're seeing decreases in property as far as rents, like 14, 12, 10% already. So that's pretty interesting. And then for the Great Lakes, the region that I'm in, we have organizations specifically tasked with making us look pretty for folks that are leaving. Like, these other tech hubs are hemorrhaging talent, right? And now Facebook is encouraging people like go live and go home, live where you're from, and then and that's cool.
Yeah, but there's probably 60% of the workforce that does not depend on in-person meetings or some kind of physical presence to get their job done. They just don't, and I work in a corporate environment where I'm walking by people that are just staring at their computer, just waiting for the time to go by. I think the unfortunate side of this, to be frankly honest, is that I think we're gonna come out of this with a lot less demand for, a lot of jobs will not come back. And that's not because they weren't, valuable. They didn't do their jobs right. And I think this is the unfortunate side, right? It's not that they didn't do their job. It's by no fault of their own, but companies will realize like, there's a good maybe 20% of their workforce that was just not necessary for them to do their job right. They're going to realize they don't need an accountant sitting there all day when they can just hire a virtual accountant for, $500 a month. Man, so many things. Like, I think freelance work will just explode. And more small business will have the opportunity to, just expand in ways that before they didn't have to because everything was fine, but now they're forced to.
Yeah, exactly. So a lot of companies are, improving that. They're forced to improve process, right? And how are we going to make it through this? Like, how we only have so much cash, right? What's our runway? One way is to improve and innovate on process. So now that we landed there, do you have any examples in your community of organizations or founders that have specifically innovated on people or process because of what's present?
Sure. I think the best example is Block Lawn Care. I didn't even know what they were doing for the longest time, but they essentially had this system where it was an Uber for your lawn, right? You go on and they had people that they employed and they would go out to your lawn and they would do the work. And they're realizing I think in this moment they realized that model didn't work, and that they completely changed that over to providing a platform as a service for the mowers themselves and letting them operate and run on their own. And another, Volley is actually this guy by the name of Ethan Shipp, and I'm more just excited about the work that he's doing. He has this kind of concierge, like he comes to your place, he picks up your car, he takes it for an oil change, he takes it to be washed, he takes it whatever you need, right? And he's done some interesting things where, like, he's been marketing in a way where he'll I think he may partner and with another company and sanitize the cars for them, and but he immediately kind of started seeing opportunity, like, hey, in this moment where people don't want to go out, like he can maximize what he does. Waiter's a great example. Our success story here in Louisiana. Waiter's a food delivery service, much like Uber.
Is that from Baton Rouge?
From Louisiana. No, from Lake Charles. Lake Charles, but they're headquartered in Lafayette, and the founder, which was the founder, came in and out of our city a lot, working with entrepreneurs.
That's one company. I'm sorry to spit it up, but that's one company that I always bring up to founders who are from like flyover towns. And I say, because they're struggled with what we talked about earlier. Do I have to move to make this work? I said, no. Like, there is so much opportunity in small and mid-sized communities, and so many people live in there, right? And Waiter is a perfect example. You don't need to be DoorDash to have insane revenues.
Yeah, and Waiter's done a great job. Waiter, I think within a week or two, I saw on their app that they're doing, they're delivering, groceries all of a sudden. It just changed, and guess what? And yes, it's maybe because of the pandemic, but they had their first profitable month ever last month. So go them. It's
wild. I'm working with a behavioral healthcare startup, and it's a pure telebehavioral health. So it's all over the internet. And the CEO's been and founder's been doing this for 4 years in this model. And now because of COVID, everyone's like, "You're a genius." She's like, "I've been doing this for," but yes, like I'm ready, I'm poised. It's time to scale. Let's go. So
yeah, people are gonna have. Look, we're one of those. Under not so great circumstances. Horrific circumstances. Our startup Mentor had its best 2 months in signups for the wait list ever. Right. We've had more people reach out to us ever. We've had more people on our social media than we've ever had before. In that short time, we've expanded the role of one of our advisors. We brought in a social media manager. We just hired a developer to finish some work, and now hiring an AI ML engineer. So and I'll be honest, like that's timing. That's not like that's timing we didn't plan. We understood when we started this that we were pushing a trend of virtual connection that wasn't prevalent in the moment. It wasn't. But now more and more, and most of our competitors were built to do in-person connection, and that's their entire model. So we don't have anything in person built in. It was all about getting to the video chat, and doing all that within the one app, and seeing, they can take it from there. But we're one of those, and that's awesome to hear that, who you're working with is the same. You're going to have people that, find success stories through all this.
Now, there's a couple of things that I want to touch on before we wrap up. You mentioned before we started recording about this being, talking about the pause that a lot of people are presented with here. Whether it is because of a layoff or a closure of their startup or business, but now they've got this time.
Yeah. So the person that I brought on as my guest in the event in April mentioned this, that during the last pandemic, I think it was during swine flu, which was going around that time, she had some time where she was off, and in the time that she was off, she rethought of her entire life and like quit her job and moved on to be an executive coach and speaker and everything. What I think is, so are you referring to the mental side of it, like of people reconsidering themselves, like, and
then all of it. We've got this time on our hands. What are we going to do with it, right?
Yeah, and so I don't know. I think when I first went into it, I was like, hey, be productive, read, do all these things, but like, there's only so much we can consume, But I think in this time, people will realize like having a second to breathe, because we're trying to be so efficient before this, it's get to work, complete, restart. And it's just over and over and over. We're doing the same thing. But having that time off is, I think in its own way, kind of a blessing. Like, this maybe never again in our lifetime, knock on wood, that's a possibility. Never again in our lifetime there is a pandemic of this size, right? Because the last one was 1918. So never again is one where it shuts the entire economy down. So this is that 2 months, that was the world's 2 months to, or at least the U.S., talking about U.S. terms, that was our 2 months to think, to breathe, to reevaluate what we do, how we're doing it. Businesses have an opportunity, they have an opportunity to sit back and wait for the government to say, oh, we're reopening and we're going to be better than ever. Yeah, great. Okay. If that's what you want to believe, maybe. And if that's the case, we're all winners, and I'll be happy as hell. But I don't believe that's the case. I don't believe that we're going to be right back to where we were. I think a lot of companies are going to be rethinking how they do business. And those that did prioritize strategy and prioritize adjusting, and I'd say, maybe to some extent pivoting their business models, will be successful at the end of this.
Yeah, it's fairly quickly that businesses had to take a real honest stock of where they stood. Like, how much cash do I have? Do I have 4 days of cash? Do I have 4 weeks of cash? And those are tough realities, because then you're also like, well, why? Is my business model even valid? And that's even before you think about pivoting. You're like,
yeah,
was this even a great business model in the first place?
That's a good point.
We're pulling back the covers on all sorts of issues. Now we're talking about social issues, and as a country, as a nation, whether it's financial, in our last crisis, financial crisis, we exposed the run on debt and stuff like that. So,
and then fintech has had its day. Fintech has been booming ever since, because we don't need to trust just the 4 big banks or 5 big banks, whatever they are, to run all of our money, right? All of a sudden it's you have all these other different companies that are coming up and wanting to provide better services. Obviously,
and now we're ready to talk about security and
yep,
and how important that is. Blockchain.
Blockchain. I saw we put a post out through Mentor Monday. of how the next generation of social networks will be connecting people instead of profiles. The next generation of social networks will be bot free because they will be verified, much like an Airbnb style. You will take pictures of your ID, not from this for surveillance or this or private. Like it's so that when you go out and you're communicating with people, you're communicating with people.
Right.
That I think authenticity and trust will be the foundation of the next, wave of social networks, because they will be different. They will be completely different. And so I'm excited to see what happens with them.
Yeah, it's fun to, I love tech for all the fun titles they come up with, like Chief Trust Officer,
Yeah. Chief Trust. Yeah, there's those. Yeah. And just on the final note with money and business models, I couldn't agree more. One of the things that I noticed, we with what we're doing with, pouring money back into the airlines and things of that nature. Okay, if you don't understand business, I think just from a consumer level, you just think, hold on. So if I can't pay rent, I will be kicked out. So I'm told I have to have money in the bank saved up. That's my rainy day fund. You're a business making billions. Where's your rainy day fund? You've been in business for decades. So during those decades, have you not been able to save? Or do you just not want to spend your cash? So I think the average person, no one needs to give the average person facts on that. That should be, because it doesn't, if you tell me, oh, well, this about the market and that about the market, at the end of the day, like the average consumer could care less about what you think about the market and how we have to infuse this money for that. They're like, listen, if I was a business, I'm not being bailed out. In some ways, I'm getting help. But at the end of the day, like, how is it that these businesses don't have, 6 months of extra cash sitting around? And if they do, what's the problem with using it? Because what's going to happen at the end of this is the inevitable inflation that will affect who? The average people around me and you, Corey. So
I agree with you. What came out of the last crisis was, financial stress tests for banks. It'd be really great if the SBA said, hey, it's time to do a financial stress test on every small business in America. We have some of that data, but usually it's not the small business person who's doing that for themselves, right? They're just pushing it as far as it can go. So that's a good point. The last thing that I usually like to talk about before I wrap things up and then you're like me, you're very young, startup grind chapter director. I saw, your community is about the same size as mine. But I still have been able to get around, do a little roadshow through the state and build some connections. And that has meant that my phone blows up, my email blows up, my texts, my Slack on people who are asking for advice. So what I'm asking all of these chapter directors we're talking to, it's been really insightful since everyone's coming from different perspectives in different parts of the world. What's the most common advice that you find yourself giving, or the most valuable on these like one-on-one interactions when people are just coming to you because you're now the self-proclaimed mayor of entrepreneurship in Baton Rouge?
Well, I wouldn't call me that. I honestly might be the thorn in the side of the entrepreneurship ecosystem here, because I'm always like questioning things and calling out what we're doing. But in many cases, I ask people all the time. I'm like, hey, I want the same back. I prefer like a no bullshit kind of communication style between people. So, what do they ask me? A lot of it is around starting. A lot of it is about VCs and raising. It's funny. I tell people like, so I'm an immigrant. I've seen my family build multiple businesses. When we started, me, my co-founder Scott, and I started a few years ago, I was aware that there was this idea of fundraising, but it was alien to me. I didn't know this was a thing where you would get other people to put money in. Like the only path forward we had was, so we're going to build a product. It's going to be great. People are going to buy it, and then we'll use that money and we'll reinvest. Like that's that's it. That was the only sense of, business and growth that we understood. So, going out and now that we're raising, it's been its own challenge, but I think I've approached it with a different mindset. Like I've approached it and I try to tell them, like, approach it with the mindset that you're not begging for money, So if you go and just build relationships with people that might help you, and give advice, what they say, like if you ask for, if you ask for money, you'll get advice. If you ask for advice, you'll get money, So I can't pinpoint, one thing that I would tell people. You said something here a second ago that people ask you for help, right?
Mm-hmm.
And advice and things like that. I am I deflect, but I deflect to help my community. So for instance, if you came to me, Corey, and said, Kasra, hey, I'd really like some advice with, funding. And I'd say, okay, like, what's your industry? What's this? Hey, can you help me? I'm like, oh, absolutely not. But I have someone great right here that can. Because we need more people to have. I'll say this. Have you ever seen at the end of you're at a conference and you're at the end of a speaker talks, and at the end of it, everyone floods him to ask him a question or something, right? He's not going to say anything magical to any of these people. He's going to re-say what he said on stage, or he's going to give some generalized advice, but people are excited about it because they feel like, a connection with him because they talked. I'm trying to build that amongst the people in the community, with one another. So yeah, I mean, one thing we do, when people show up to our in-person events, we give them a card that says who to meet. And we name 3 people that best match them, their industry, their needs, and their experiences. And so that they can not click up, and go and meet new people,
Mm-hmm.
but we give them direction. Advice. If someone asks me, I point them to the person they need help with, unless, I've actually built a relationship with them over time.
Well, I think that's powerful because you're building you're building that community and you're building expertise within it, right? You're lifting everyone else up, which is really powerful. And it's these small communities like you and I are in. It's a constant effort, and it's interesting because sometimes it's very siloed, and people they probably didn't even know that person existed, right?
Yes, absolutely. I was furious when I met the Entrepreneur of the Year, and I met him almost 8 months after he got appointed Entrepreneur of the Year, and I was livid. And I talked to my incubator executive director, and I was like, what's going on, man? Like, why don't we know him? Why don't I know him?
Right.
He's like, well, you're not looking. I'm like, well, he's the Entrepreneur of the Year. Okay. Like, why hasn't he been here to speak? And I voice it in that way because we're small enough to where we should know the movements of everyone in town. There should be a crunch base just for our city.
Yeah.
But anyway, no, I agree with you, man. There's, I think the more we connect people, you'll see that there's a lot of talent and there's a lot of expertise that simply hasn't been, uncovered yet.
Well, it's been a real pleasure to get to meet you, make your acquaintance, and begin this relationship. One thing that George and I are doing is we're committing to messaging folks on a monthly basis that we speak to just touch base. How are things going? Thumbs up, thumbs down, and then also how can we help? Because that's another thing, right? It's just like, how can we help? How can our region help your region? And that's why we're asking questions about, the state of the ecosystems. And we're finding some really cool opportunities, like over in the Gambia, and then also some resources, like say in Vancouver, in Santiago, Chile, and some real fun opportunities as, we flatten this in-person thing that's not necessary anymore.
Yeah, absolutely. Yeah, please, I'd love to stay in touch. Reach out to me, and if anything, I'd love to share what we're doing with Mentor with people within your community, because so that we can connect all of those entrepreneurs between the coasts and not feel that we're so dependent on, the Valley and the staple that is New York. So yeah, man, I really appreciate it. Thanks for having me. Thanks for sharing your experiences too. It seems that we're facing similar challenges being where we are, but it's really refreshing to see you and see what you're working on. And yeah, I had a good time.
Well, yeah, I think George and I say this all the time. We're having fun. This is a crisis. Things like the sky's on fire and the walls are tumbling. The ground is breaking up for a lot of folks. But that's why we're calling this the search for silver linings. And there's that phrase, like, you just can't let a crisis go to waste. You got to learn from it. And entrepreneurs, we're the ones. We're the ones running into the rubble. Like, oh, I can build a house out of that. So
yeah.
anyway.
Yeah.
And with our shared experience in hospitality, I look forward to one day sharing a meal with you. That'd be really great.
Hope so, man. Thank you. Appreciate it, Corey.
Okay. Cheers. I'll give you the rest of your day back. All right.
All right. Thank you.
All right, everyone. Thanks so much for joining us again, Monday, Wednesday, Friday. If you don't join us for the live programs, you can always check out the recordings at startupgrind.com/grand-rapids, where we also have all of the notes from the Global Market Update, required reading to keep you up to speed. And like I said, maybe we can see around the bend, even though that we can't predict the future.